Hi, good afternoon, and welcome to those just joining. We're going to be giving a PayProp demonstration here, looking at the impact of COVID over the last 6 months. I'm going to give time for everybody to join, just depending on who's able to attend and dropping in and out. Everybody who has registered to attend this, we will be sending out an email within 48 hours of it concluding, which will also include a full printed brochure of the details that we'll be covering in this report, but it will also have a link to a copy should you want to rewatch part of this webinar at any point in the future. At the moment, this is our first relay of this webinar, and it's being relayed only to our PayProp customers. So I'll give a bit of time for our attendees to join, but I will want it to be kick off promptly. We've got a lot of crunchy data to go through. We've also got some settings. I will try and make it as enjoyable as and informative as possible. Once you do start looking at some of the data and looking at the arrears and the regional variances, it does get quite number heavy, so I apologize, and I don't want people glazing over at this point, but we will be going through some quite in detail numbers. And then what we do is we will have a part where you can submit questions. So if there's anything that comes up during the presentation or that you think to ask, we will be running and doing these at the end, but please log that into the Q&A section of the webinar, and we will address those at the end. Even if that involves me going back and re-looking at the slides, we can actually do that. If it's something specific that you're wanting to cover that you've seen on the slide, actually, if you could reference the information, it'll make it easier for me to go back to that at the point during the question and answering. I'm actually going to leave it until probably about 13:02 just to give a couple of minutes. I know it's a 1 o'clock presentation, but we all have a lot of these into our day and into our agenda, and I want to make sure that everybody has a chance to come in and to see the information. So we've got a mix of people on our clients here who will be new and old. So there'll be a lot that we should hopefully cover, not just around how we can use the platform, but we're also going to look at some interesting applications when we come to look at a study that is done in the latter part of the webinar. If anybody does have any questions about that or raises regarding their use of the platform, again, you can ask questions on this webinar, but if there's something that you feel you would need to address or to look at for your business in particular, then our support team are on hand for you to contact and reach out to your support representatives and answer those questions. They also have access to me, so if it's something particular to the webinar that you want them to look at in relation to your business, again, they can come back and they can quiz me as to what that is that you wanting to put in place. Okay, so we're 13:02, so I'm going to kick off. And I suppose, first of all, although we are PayProp customers, we've joined at different parts through the journey for the UK. So one of the first things I just wanted to be able to do was to center us on what that actually looks like currently for us within the UK. And what we're actually looking at is we're now part of a group in the UK where we're transacting on over 80,000 tenancies active at any given time in the UK. And we've now, from our heady days in launching in October 2015, and I know some of you have been with us since the start of that journey, we've now processed more than 1 billion. What that does mean is when we look at things like the impact that something such as the pandemic is able, we're able to use in an anonymized format a huge amount of data points on that information to give us quite comprehensive look into the patterns and the performance of our tenants, our landlords, and what we can learn from that past behavior to hopefully influence our future decisions. But before we come to look at what that impact is, we've almost got to do a reset of where we were 3 months ago when I gave that first quarter review of what the market looked like. I think then we had a view that it was going to be a short term. As we come to look into some of those studies that have been done, we'll see that our view of its impact, of being over the worst, and our timeline have started to change over this the next quarter that we're reviewing. And I then want to come on, we're getting a lot of people in our industry at the moment starting to talk about the impact of furlough and what that could mean to our industry. And I want to just recap back what furlough means and why is it now becoming such a talking point when we look at the way people are referring to not just our industry, but industries in general. We also need to look, we're getting a lot of people talking about recession and the worst recession. When I did this 3 months ago, the Bank of England was saying we were going to get a contraction on the quarter of more than 35%, and that would lead to a year-on-year contraction that would be worse than the Great Frost of 300 years ago. So how has that played out? Is it what's been expected? There was a sharp V bounce that they were then describing to this pandemic. Has that played out? How has it affected our sector compared to other sectors within the UK market? So what we'll do is, and what will that actually mean for us? And from some of those other sectors that have perhaps taken more of a brunt from that current recession, what is the cross learnings that we can actually take from those industries? Because we're going to look at the arrears picture now and how that looks in the past, but there are also things that we can take from that that can influence our decisions in the near to mid-term future. And one of the things that I think has changed from a quarter ago is we are now more open-eyed towards how long this may need a mid to long-term strategy for, and how much it could play into the different parts of our life. I do have it on here, and I hate the phrase the new normal, but it is starting to become part of people's vocab. So I have to start referencing it. I never like the fact that something like a pandemic actually changes the way that we operate and the standards within our industry, which has been referred to. But it is changing people's perceptions, and it is changing people's confidence in certain sectors within our economy. So we'd be remiss not to look at those and to see if there's anything we can use to mitigate what may be bumps in the road ahead for us within the property sector. We're then going to look at that UK arrears picture. What does that tell us? Is it as bad as was predicted? Is it the doom and gloom that was coming from the BOE and some of the other sectors about what we would experience? And as we experience local lockdowns, what does that mean to us in regional variations? Are we already seeing that play out? We know the different regions are playing out at different speeds. Can we see that in the way the arrears picture is actually being played out in the UK in a general fashion? So we'll look at that in more detail. And then lastly, as I'd mentioned, we've got this arrears case study where we're actually going to look at somebody who made a decision during the pandemic and who has come on. Have they used it in ways of a technology adaptation that some of us that have maybe had the platform for longer have taken for granted some of the processes? And could we make this same adoption that they've made and actually see the kind of impact to our business that they were able to see during their lockdown adoption of PayProp? So if we look at furlough first, why is it becoming such a question at the moment? It's because what we've actually got with the flexible furlough scheme that we're going into the moment is, in essence, we've got a 4-month reduction. But we already saw it in July. People were making the decision as to whether they wanted to start in August, even making the small contribution towards people's salaries. Now in August, that only involved them paying their heirs and pension contributions, which is a very small, but if you are not planning on bringing that job back, if it is currently surplus to requirements, it's the start of contribution that first made people make that decision. And we started to see people come back from furlough. But as we saw in the statistics that were reported yesterday in the jump in the unemployment rate, we have had people already become victim to this reduction in furlough. And although it does reduce over the next few months, let's not get away from, we have got a cliff edge removal that is approaching us in October. And even though we're looking at things like the resurgence of the pandemic happening across Europe, it has been very clear that that is a cliff edge removal of the furlough scheme. So when we have this second wave, we've almost got the question of, do I bring people off of furlough? When do I make that decision? When can I understand that these people are coming back? And it's that uncertainty and the contribution factor that's needed that are causing companies to make the decision to let people go. There have also been changes in the way that we work. across the country, and they are also impacting, and we'll come on to what that looks like at the moment. There's been some BOE and Bloomberg analysis which actually looks at job surpluses. But let's not step away from what furlough has done. As of the 16th of August, 35.4 billion have been provided by the government via the furlough scheme, supporting 9.6 million jobs in the UK. That cannot have helped but affect the property sector in a positive way in the amount of people being able to pay their rent over this period. When that is removed, it will have an effect. Now, a lot of people are saying, well, with more pandemic and everything, why can we not continue lockdown? And I've written it down because when we hear it, we often say it, but 35 billion is such a big number. And we need to appreciate that we don't have an unlimited book. However much we would love the government to support, there's a certain point where supporting the pandemic becomes unviable. And it then becomes that decision down to the separate employers and the employee. And that is what we've got fast approaching. And as people make that decision, it will filter down to us within our property and letting sector as people become unable to make those payments. So what do we do in that situation? Well, I think first of all, we should look at what it means when we talk about people away from paid work and how phenomenal that gap has been. If we look at where we were at the situation in June, then this is what the picture looked like. And we were supporting 7.5 million people away from paid work. Now, that is a huge number, but how much of that can actually go back to work? Initially, we were talking that this will be a short-term fix. Unfortunately, what we've seen is a metropolitan shift over this period of time. People have now started to question their need for offices. As you saw an announcement through PayProp, we've already gone distributed. Nothing to do with the pandemic. We were already discussing this in January. But as a company, the need to have those centralized locations has certainly been highlighted in more businesses. And hugely affected then is the services and hospitality sector, which involves people actually needing to travel to those metropolitans. When we come and look on the winners and losers, the technology adoption has actually changed the viewpoint of these people going back to paid jobs and who is needed to perform these. Technology, and PayProp certainly, has never been about replacing individuals. It's about allowing people to repurpose, but we have certainly seen during the pandemic technology adoption as a way of reducing the workforce. So some of these people who are away from paid work and in furlough actually don't have a job to go back to. So we are carrying a surplus. We found it a later adoption because people's travel confidence has been knocked. Yes, we can go and use public transport again, and we're sitting there and watching who's wearing a mask sat opposite us and asking the question. But the confidence of being in those confined spaces and doing it actually has caused as well as to shift away from those metropolitans. And actually, when it comes to people on their property decisions, I've got some graphs which we can look at where people's actual perception and openness to change, their priorities have also changed because of this. And although we are removing the furlough in the run up to October, we are at the moment coming into what for the services and the hospitality sector has traditionally been an autumn slump for them anyway. As we come out of the summer period, we run up into the run to Christmas. Part of the need for the Black Friday and the instigation is they go through this changeover, and it's to re-kickstart. So we've already got people looking at their current supply levels and their capacity and asking questions about, do I need to return this person from furlough? And wherever there is that uncertainty, there will be people unable or unwilling to make that decision. And yet the cliff edge removal comes, the decision will be made for them. So let's look at where, when we actually analyze this, where is that fall? Where are we seeing the capacity? Because if we look at that, that's a big number, what can actually come back? But we've already seen these Bloomberg stats playing out. The redundancies that we had announced in July, the employment figure that came out yesterday, shows us that during August, we actually reduced down to a lower number actually being on furlough and not returning to the workforce. But even if we take it where it is and their projections,
Employers, through their uncertainty, they're still saying that we're carrying about a 2 million surplus. Now let's put that into context. The stats that came out yesterday on the employment data actually had us going from 3.9 to 4.1, which was an extra 62,000 people in the month being added to the employment line. And yet these figures are saying that we potentially have 2 million surplus jobs currently being carried by furlough. Now that will obviously be adjusted down and people are able to bring people back into work, hopefully, if local lockdowns don't restrict that movement. But it still means we have a heavy surplus. And what will that mean? We've also got, when we had the August drop-in, we've then got the question on this 2 million of work or isolate. Where do I actually sit with this? Because with local lockdowns and figures, what do we now have to do as an employer? As an agency looking at bringing people back, do I now need to look at whether I'm on the watch list, where I am on the watch list, as to whether, because once I remove people from furlough, I've made that decision. As it gets wound down, I don't have an option to then put them back in. So we've mentioned that there's lots of people putting a call out in our industry and in our, be it through Property Industry Eye, through Letting Agent Today, or even looking at some of the government articles. Almost daily people are shouting for an extension. We've got certain services and hospitality shouting out that we're in need of an extension. But Rishi Sunak has been very clear. There is going to be no extension. We have reached the top of what our coffers are able to do to support the pandemic with government assistance. So then we said we look at where it is as recession, because typically the property sector historically has found that when the recession hits, we are one of the first sectors that we notice the drop off. And actually, I'm going to come on to our property sector stats, but that is certainly not the case. So why? How has it played out and why is it changing for us? And I think when we start to look at what's actually happened with the GDP in recession, what we've got to look at here is it's bad, but we're not quite the worst. I suppose that's the way we can put it. But it was also not as bad as what we were projected. As I said at the start, the original projection was a 35% contraction. What we've actually got here in Q2 is a lot less. It's still the worst, and it's now saying it's the worst recession since the end of the war. But we're actually saying that over the course of the year, it's probably going to play out rather than 14%, more like 9.5% contraction. That's still a huge number. When we think that our general GDP across the UK is around 2 trillion, what we're actually talking here is £190 billion deficit. So then there's a horrible kind of equation that we see happening at the moment within government and within the economic studies, which is almost looking at what is the value on life. Because you get people looking at, well, why did we go into lockdown for the amount that it's affected? When you look at countries like Sweden, which didn't go into the same lockdown, but have experienced it in completely different ways. And they start then telling you that actually, based on a valuation of 20 lives saved, it's 6 billion that we can actually put that would return back to GDP. But it's not that. For anybody who's been affected through this, and that's partly why we look at the property sector hasn't been affected, is this has been a people-based pandemic, and anybody who's been affected, there is not a value or a monetary figure that you can put on life, the extension, or the fear that we feel of this rippling through the economy. So let's look at what it means for us in the property, because actually there have been some winners and losers. And unlike what we've done previously, we've got nothing really that actually says, why is this not affecting us? But actually there's some real key demographics that we need to look at. So just to quickly run on that, where are we at with our monthly gross domestic product? Because with the winners and losers, property, we have seen that steep V. Unfortunately, the Bank of England's projections haven't played out in the same way. And as we can see from this graph, we're already 17.2% behind where we were in pre-lockdown levels. And for the first time ever, people are starting to say in reference
to the overall sector and overall GDP, will it recover? So prior to that, and when we were doing this 3 months ago, everybody was still when it would recover, and is it a sharp V or is it a U? But now we're starting to get this, and this is where I have the phrase that I mentioned, and it has to be in, is this our new normal? Now, actually, that's great for the property sector, because if we think of our new normal, well, on actually instructions and volume of instructions, we are already back to where we were at pre-lockdown levels and above. So we are definitely at the moment winners economically wise. And there's a number of people that will look at different things that we did discuss around the fact that we had an early opening and that there was a huge confidence given to our sector. And we've never had that. Typically, as a sector, we have been vilified. Typically, if there's something going wrong, we are the first person that is the fault or the problem. And actually, we're finding that's changed. And we're finding that actually that confidence factor has played out into the way we are able to communicate and deal with our customers. And there's actually been a priority adjustment that has actually played for the property sector's benefit. So when we look at where we say the winners, what else can we look at? Because instructions is only one, but it doesn't matter where we look at. Whether I'm looking at the top data, which is actually, we're referring to a tenant high, and I'm not talking about tenants using properties as grow farms to supplement income. This is actually the Property Mark stats, which over all time now show that the number of tenant applicants held per agency is at a record high. And they also showed in their stats at the end of July exactly the same regarding their portfolios. If I then take the recent stats that were brought out, and these were the good Lord UK rental costs, looking at when we went into lockdown, every single region within the UK is showing an upward tick. And the information on the right, for those that are used to looking at this, is the home rental index. And for the first time, yes, we can look on the year to year, which are the top two numbers. But if we drag it down to that bottom, that is the month on month variation. And whether we look at the UK excluding or with, for the first time, it's actually growing at 2.1% irrespective across our UK network for the month of August. And so for us, that's scarily uncommon. That is not what we have. It's either sales are buoyant or lettings are buoyant. When it's into the recession, one takes the hit, one takes the confidence factor. So what's changed it during this with the pandemic? And I think it's when you start looking at how people who are surveyed are looking at it. So when we look at these two pieces of information, one being from the State of the Industry report from Good Lord, and the other one is actually from a law firm called Gilson Gray, who did a survey into sentiment. What we're actually looking is that we are finding some of this being blowback of lockdown fever. We spent such a long time in our properties, in a forced situation, that it allowed us to relook at the properties we were in and the decisions that we'd made around those. Companies now looking at the need as to whether you need to travel in to an office or not, and making the decisions like PayProp have around distributed working, is also lending people to look at, what do I need my home to perform? Is it just something functional within commuter distance? Or am I now looking at space, what I actually have within my own area, be it gardens, be it working space, are all coming into it. And if we look at then the different generational differences, we're starting to see in the elder generation actually starting to make density decisions. And actually now closeness to family and rural areas actually making people move. And as we can see from that top one, over a quarter of people are directly, who have made a decision to move, are quoting COVID as the reason for moving. And that has started, as we've always said, the reason that recession typically impacts us is because it stagnates people's confidence and their want to move. And the moment we get it, we get an overglut of one or the other, which then leads us into a supply and demand situation. What we've actually got here is, be it renters or buyers, a lot of people who are heavily motivated towards changing their current living circumstances. And that openness to change has actually generated enough of a momentum into our property market economy to actually keep it moving.
But is that short term? Or what can we do to look at sentiments and other markets and to see if we can ride this out for what I'm going to come to show is possibly no longer a short term and more a mid to long term strategy that we need to adopt. So I'm going to look here at the travel sector, because I think when we think of the pandemic and we look at the things that have been certainly as a consumer that have changed our outlook in what we're willing to do and what we're willing to experience, the travel industry has seen some of the most marked changes during the pandemic. And when we actually take this and we look at, they do a mood, these are taken from Visit Britain statistics. So where everybody's been talking about staycations because of the uncertainty of the air corridors, they've been actually doing this mood analysis on a week by week. And a lot of people's view was that over the summer holiday, as we get time to reflect, as some of the lockdown measures were eased, that we would actually see this mood change. And actually what we can see is actually the mood has remained pretty stagnant. And I think the reason for that is we've also had some things that as the consumer, they have shaken our confidence. Whether we believe it or we expected it, some of the questions have changed people's moods. So within that, we have had people change, but overall, as a group, people have moved in and out of what they were expecting. When we look at some of the decisions that people change, we've seen a lot within the news about it taking 10 days notice for us to be able to adopt masks, but 5 days to actually adopt the quarantine for Spain. So as the travel sector, they were hugely critical of this decision from the government, because what they're trying, they couldn't understand the differences. And whenever that happens, that's why we didn't see this uptake when we were given more freedom. But it actually shows in what it's done to our long-term view. If we start looking, if the mood is static, why? Because we were expecting it to pick up, and it's because of people's long-term outlook. And this perception shift is shown here. And we can actually see over time, while the mood hasn't changed, our view that the worst is still to come, that the second wave is actually out there, has actually started to withhold our need for that mood to increase. So when we actually come to look at that, what a lot of people are now starting to say, if the worst is still to come, what can we see from around the globe? And I've put up a blank space here, because I think that's how a lot of us feel. We're being told certain things like the second wave of the pandemic for the Spanish flu was the worst. We're being told that Europe is experiencing a second wave and it's 2 weeks ahead of us. But what does that mean to us? What are we going to experience? There's so much uncertainty that a lot of people who are the economists that we drive to, or the politicians that we expect to be the knowledge centers in this, are almost saying, well, how long is a piece of string? And I think we're starting to say, well, show me this string, because I need to know what's happening. My level of being able to run at uncertainty has reached its limit. And because of that, we are now starting to change how we see this return to normal. And so that's why I had to put that new normal phrase in there. Because where a lot of people would have said at the end of July that actually their perception has changed, this shows how drastically. When I did that first quarter, a lot of people were still seeing this as an end of 2020 situation. Now we've got 41% who are actually saying that this will be the end of the following year. Now, what's changed over there, because we haven't had a lot more information, we haven't had a lot, but it is actual that we're actually starting to see this perception shift change. And that's actually changing our need to look at mid to long-term strategies. And that's going to be the same for the property sector. We can no longer look at this that, okay, we came out of lockdown, we dealt with our backlog, there's been a perception shift, and this will run ad infinitum. It won't. In the same realization that's happened here that we've seen playing through the travel sector, it will also play out into our property sector. So what is that going to look like for us? Because what we're hearing about at the moment based on this is that the services in ICU, property's not, but let's not get away. We are a services
based industry. And that will play out. And we can already see that playing out with the furlough and some of the situation into our arrears. So I'm going to come into some crunchy numbers now. So if you do have any questions or you do need this information, this will be in the report that is downloadable. It will have all of this graph and arrears information. And as I say, you will be given a chance to relook at this webinar. So if there's anything that you're then saying, I want to go back to that, how do we come to those numbers? You will be able to refresh and relook at the information. But when we're looking at the tenants in arrears, as we did for the first quarter, we were looking at a percentage of an agent's complete portfolio. How many of those tenants were actually in arrears? And then what was that growth did it look like? As an expressed of all of your tenants that you invoiced over that period. And I suppose what we can actually see, if we look at the play out that's happened over the last quarter, is we can see that delayed reaction that's now starting to play out in August, in the increase from July to August of that 1%, is actually the start of what we see with the unemployment figures and the impact of furlough. As I say, if this is our impact with only 62,000 being actually going into the unemployment line, where we've got a 2 million question still being asked, the question that I need to ask is what will actually happen with that? And once that hits, what will the market reaction be? Is that the time we start to see that confidence shift and it reacts in the same way that we saw the recession in 2008? That at the moment we've been buoyed with this sentiment and with the furlough, is our actually impact still to come? What we've also seen when we analyze that June, July, August play out is for some agents, you need to make the decision and provide that assistance to your agent over the decision over some or none. It is not going to be your tenants that approach and offer to pay partial rent, or that is going to be the few isolated cases. As a norm, when they reach difficulty, it is a shutdown. But actually what we have seen play out with our agents is their ability to go and navigate that and get some has actually alleviated the concerns of the eviction ban and the extension, which comes down this month, but also their ability to show that the tenants are actually making that move. And what we need to look at is when we're talking about that extension and it being lifted and the ability to go to the eviction ban, the burden that's now going to be placed. There is going to be within the courts no appetite to just a blanket application of coronavirus related arrears. We've already seen that in the levels of now when it's notice periods. We've seen that in when we look at how you can escalate for rent or antisocial behavior, the levels that are required, where that needs to be at a 6-month level, where ASB automatically qualifies. And again, I would love to see how that plays out. As somebody who's heavily been in that, I know when we've previously used this ground, how our level of success has played out. So how are the courts, when dealing with this backlog, actually going to help with this arrears situation? If we then look at it as we do as a percentage of the total rent. So again, we look at this on an individual basis for each of you as our clients, work out what your rent is, and then look at your arrears as a percentage. And then we work out what that is across the whole portfolio. But based on that, what we can actually see is we do have a persistent debt issue, but that's to be expected. There is nothing that has drastically changed over the last 3 months that suddenly improves the majority of people's position that they were in or their ability to pay 3 months ago. So we're seeing it now back and above the levels it was at May. So when we saw a play down that as industries opened and people were allowed to go back to work and were removed from furlough and got 100%, that people did actually pay their rent. And that was good, because when we were first looking at this during lockdown, there was a huge amount of naysaying from various within our industry and externally that by banning the evictions and extending, we would find a lot of people playing the system.
And I'm not saying that there are not agents that we've had to come and assist in some of their rental information, that they found people that they feel are doing this. But what this shows is, as a whole, where people had the ability to pay and reduce that arrears, that was what we actually experienced. Unfortunately, what we are now seeing is the people that were left are left in persistent debt. And unfortunately, there is nothing happening to change their situation. There is no influx of recruitment. There is no way, once they're put on furlough, of actually getting themselves out of this situation. So what to come? If this has involved this step change back to where we were at May when we restarted the economy and allowed people to go back, what is going to happen when this 2 million is actually reduced? And what does it mean to us as an industry? Because the people, when you think of that some or none, when you think of people involved and unable to change, we start needing to be that communicator. Now, I use the word concierge, but basically we are all things to all people. We, during this pandemic, we have become their social worker. We have become their mediator. There's all kinds of situations, but it all comes down to what we have known always within this industry, that we are a people-based industry. And it's strange coming from a technology company that we will never remove that. However much we streamline, however much we automate, there will always be a need. And if anything during the pandemic, that need to be able to have that person-to-person interaction, to be able to have that mediation, to bring those two parties that are at opposite ends of their scales together and find a common ground, has become more important. So I'm going to now look at what that's meant across people in their different buckets when I actually look at that percentage of tenants. So we could have here a need to be looking at where we're actually, what are we seeing with this information? Because May looks to be the worst at that persistent debt. And although August is starting to come down, what we're actually seeing is that furlough is becoming the pre-lockdown leveler. It is actually bringing things back to the situation. And where we may have thought things were on the up, we do have to bring ourselves down. What is our long-term picture? How does it work if we are seeing arrears grow? How do I offer the levels of service that are now being demanded of me, particularly if my income is still starting and is still tied to that arrears buildup? And we need to start looking at what we can predict happening. Because there's no point us walking into this and saying actually furlough is going to happen. It's actually going to have an impact. At a local level, when we come in at the regionals, that could mean that I'm going to see another 10% of my rental income by the time of November unable to pay. What does that mean to me for my landlords? What does that mean to me for my service? What does that mean to me for my income if suddenly 10% of my income is no longer there because it's tied to the receipt of that rent? And how do I continue to be a viable service if it is so vital that I remain within that process? And we start looking at the same when we start talking about average arrears. You could almost, looking at May and August, be contemplating that you're actually seeing double, but where really what we're actually seeing is an impact of the eviction freeze. So what are we doing to take out of that? What are we educating? Because if we just go through a mass evictions and we put people out into this situation and recycle people where there has been no change, and we deal with that perception shift in short order, that will very quickly change the dynamic of what we're experiencing at the moment. I know there's a lot of people, because of what happened in Wales and the hardship that happened in Scotland, who are saying within England, should we not be looking at something similar, such as the tenant saver loan? That actually the industry, and I'm not a great advocate of the tenant side, and some of the things that come through from shelter is very politicized, but I do think their call that there are certain areas of the sector that is in need of help is certainly what we are experiencing. But if that help isn't provided, the only person who protects our future as an agency is us actually working on this. And what does it mean for us? If my number of tenants and my average arrears go up, what does it mean for me? And more importantly, I suppose our landlords are wanting us to ask the question, what it means for them. Because they're the person we're an agent of. They're the person that we're supposed to be protecting and that we're looking at those liabilities. Now, we cannot
as we said in the previous one, make a tenant pay, but we can start looking at how we can predict and talk through landlords what their options are should some of those predictions come to pass. Waiting and working in a reactionary manner, while it's good and providing that assistance is still part of what a landlord would expect, our credibility, if we're able to start working on a proactive manner and making informed decisions and asking our landlords, should this happen, what are we looking at? How would you like me to approach it? Actually builds our credibility. So then let's start look at what that means as our client-centric. What does it show us? It shows us that actually we started to see, as the economy was reopened, what we have experienced in our arrears and our payback. That actually when people went back, their ability to pay increased, and we experienced that. There have been some lockdown variations on that, but as a whole, that is what the UK experienced. But that trend has now reset. Because of the furlough and the change, we have now started to see it going back. And that's where I came up with the phrase that the pre-lockdown leveler is we're actually finding ourselves back in that same situation. But it might not play out into us actually seeing the full impact of that. But we need to start looking at it now. They need industry assistance. Our landlords and our tenants are in just as uncertain situation. They are expecting and looking to the answers in the same way that we are looking to the government and saying, help, show us how this is going to play out. Our tenants and landlords expect the same of us. So how do we help and get ourselves there? I mentioned that we are all things, but really that mediation is going to become important. When we restart going back in evictions, showing what has been done, getting rid of somebody for coronavirus arrears is going to become an option of last resort for our courts. And already we've had people who are saying they're looking up to north of the border and looking up to Scotland, that with their PRTs and the housing tribunals and the first tier tribunals, it has always been that that mediation needed to be evidenced if arrears was something that you were taking as your reason for eviction. They wanted to see that we'd been that expert, that we'd made sure everybody was aware of all the options open. We shouldn't be waiting until eviction. We shouldn't wait until notice. We need to put those procedures in place now. Now they are going to eat into our capacity because that can only be done by a person. So that is whereby if we are adopting technology such as PayProp and others out there to get rid of our admin burden, it allows us to focus this, but it will be for the courts where we're dealing with arrears, it will need to be the only option. And the burden of proof on that will fall to us. When we look at it the same, that client metric movement, when we look at the average arrears, it actually paints quite a responsible picture. That actually, we've not had people playing the game, but we have had persistent debt. It has shown that when we've had the benefit shout and we've had this push of hardship money to try and bring it that they will all be in line with the 30th percentile, actually that's out of shift at the moment. But what are we doing to help people? We've had no DSS now being prosecuted. We've had that being shouted. But there's been a real problem, not just with it being no DSS for the insurance, but the acceptance of people and their ability to pay when we have a responsibility to look at affordability. And during the pandemic, there is no less a reliability for us to do that. Unfortunately, what it has shown during July and August is the reason for that shift in the arrears amount hasn't been people paying it off. It hasn't been fortunately due to newcomers. And when we have lots of people during the furlough, and I say lots, not in comparison to what we may have available, but actually new people coming in who reach their debt levels with less than a month or 1 month, unfortunately, that cannot help but affect our average. What we are seeing when we look at this though, is actually our agents with the loudest voice are the ones that we're finding are making the greatest impact. And that's not just with your technology and your chasing of arrears. That loudest voice is actually getting out there, being heard as the expert. That when you tell tenants that some or none, and this is the reason why, that actually they are listening.
But where we don't, and we just bury our heads and we'll deal with this in eviction down the line, are we offering that service that we said is the reason why you come to us as this agency expert? When we start to look at the regions, we've actually got some different pictures, and I've broken the regions down because what I want to be able to do is look at that 6-month picture by our regions. Unfortunately, when we look at this as the information, we have a northeaster winner of the trophy they probably don't want to win. But when we look at both the percentage of tenants and their growth, and we look at where they're actually gone on their percentage arrears coming down, unfortunately, they've had that biggest shift. We're seeing a new debt trend. So where we look at that as a percentage of average arrears, we can see that tick up happening across the sectors. It's scarily when we look at that picture across the months, how we see that trend playing out in both tenants and the average arrears amount. It's shown us that in some areas, more so, I would say Yorkshire and Humber regarding its tenants in arrears to where it's actually found its average rents. We've got different questions of volatility being asked. So where do we need to focus? Because in each of those areas, if you can see it playing out in different ways, do you need different approaches? We always blame the technology sector within the property are having a one-size-fits-all. Let's make sure we're not falling foul of the same ourselves and applying a pandemic one-size-fits-all to our tenants in arrears or our landlords and their situation. What we need to show is with the volatility that actually we can adapt, and as an industry across the whole, we can put a level of consistency behind. Now, when we're dealing with volatility, how can we then talk about consistency? Because I'm talking about the consistency of the service that we offer. That because somebody has entered into an arrears, because we have new local situations such as lockdowns, that actually we are consistently applying our processes to make sure we deal with the volatility that is coming within our local regions. And that involves a lot of work, a lot of planning, a lot of upskilling. And we've done a lot during this period of time. During the initial lockdown, I saw a great number of agents upskilling their representatives, be that front of house or be back office admin, to be able to cope with this situation. What we're actually seeing is that needs to be part of that mid to long-term strategy. How are we going to continue to upskill to deal with these changes? And what changes can we see happening? If I look at our next sector and I'm looking at arrears in the Middle England, I know when you think of it, it's the where does Middle England start and stop? But we're actually looking at these three territories, our East Midlands, West Midlands and Eastern. Then unfortunately, again, Eastern wins the trophy that nobody wants. When we start looking at this and start looking at the areas, we start to then ask questions, because when we think of the Eastern England region, we've got a huge industry variable. We've already talked about how the services and hospitality sector has been hugely impacted. And we find that adversely, that is a large makeup of the Eastern region. So are we starting to look at our tenants? Have we already addressed tenants where that when we did our assessments of them, when we did that arrears check on their availability to pay and looked at their jobs and their employers, can we see a reason why they might be experiencing it? A reason why we should reach out to them? That actually we can understand why they're maybe burying their head in the sand at the moment, but we want to tell them that we're looking out for both parties here. While we are there for the agency, we understand the impact of the pandemic. I think again here, what has been shown is it doesn't matter whether I look at the northern region or I look at the bottom region, we've got that same volatility playing out in different ways in different regions. So are we starting to try and see what we can learn? Have we joined local groups? Are we trying to learn this within our region rather than just relying on a London-centric MP report to tell us how we should attract and go to our sector to mitigate the pandemic's output? Because again, I'm going to say this the same in every one, it's that consistency of our service that is going to differentiate us during this, not just how we can ride out the good times. I can be a great agent when I'm getting lots of instructions and a lot of rentals and people are paying by arrears. What will actually prove us during this sector is my ability to run during the difficult times. And as we saw from that, as we've seen within our sentiment, there are now people who heavily feel that the worst is still to come and that the removal of the recession could impact our property sector because of our tenants' ability to pay. And then lastly, we look at the South. I think it's no shocker here that when it comes to looking at the impact, and we look at that over the both, that London wins. I think if we're looking at somewhere that has been impacted or that has seen the struggle of the metropolitan shift, London is the one where we do look to see that how may play out in our other large cities, such as Birmingham, Cardiff, Manchester, Edinburgh. We're looking to London in the same way that we look at the UK as well as our regional variations. We can see that there's been the Southwest difference in the way that it's actually been approached, that we've always seen the Southwest, rightly or wrongly, when you speak to people within, that London is wouldn't understand us, and the vice versa. Even down to some people campaigning there that they should have their own set of rules and be looked at their own area. But actually, we can see that that volatility has played out. Well, there may be a Southwest difference. The pandemic hasn't actually played out that differently for them in how they've seen it be adopted. They've got that same volatility and they need to ask those same consistency questions. So what are we doing? We can't just do what we always did. You know, that was what Einstein had as the definition of insanity, doing what you've always done, but expecting a different outcome. We now need a different outcome. So to actually do what we've always done would be crazy. As an industry, we need to take this information. Now, it does become difficult because one of the things we have seen during the pandemic is we've seen an information overload. I'm doing this as a webinar. I've got to tell you the amount of webinars that I now would like to go and see the information. I don't have enough hours in the day, even to register and review when it comes out to me as a recorded document. So how do we filter through that? We only do that by asking the questions, what do our clients need? And upskilling ourselves to answer those questions. Now, we then look at Northern Ireland, Scotland and Wales, and Scotland wins. Again, not the trophy that they would like, but when we look at that change, we can actually find it. We can see why it became crunch time though for Wales. When we look at where they were as a percentage of arrears, we can see why that tenant saver loan may became something for Wales to look at adapting. They'd already had that volatility more strongly in their arrears side and their ability to pay, that persistent debt needed to be answered. But so that's why I'm saying, even if we look at this and we look at the different regions of the UK, we can see how there's different questions needed to be asked. Within Scotland, we've seen it that they had a hugely low towards their percentage of arrears, but actually that has more than doubled as a percentage. What does that mean for you as an agent? You know, we're saying that this may have played out differently, but in your agency, what have you experienced? If we're now saying down to furlough, there is a percentage chance that that becomes 2.5 times worse. What would that mean to you? How do you mitigate that and how do you answer that? Because where furlough may have carried us, as we've seen, that is rapidly diminishing. So make sure you look at these and look at the consistency. Now, when we look at arrears, and I said I don't like shelter, I do look at what they actually gave me as their information, because they came out with this 3% figure. That currently, that is how many percentage of households shelter reported at the end of August were struggling to actually make their rental payments due directly to COVID. And that comes out at 227,000 PRS households. For once, I actually thought that was quite low. But it does allow me to put in perspective if I've got a potential another 2 million individuals. Now, admittedly, that doesn't necessarily mean households. Some of that surplus could be
actually affecting more than one household at a time. But again, it still is a huge figure for me to start saying, what does that matter? How would another 10% affect me? We've then got a lot of the industry telling us that we should actually be trying to get our landlords to give us actual holidays because we have these fat cat landlords that are making money out of the pandemic. There's a really good piece of information released by the NRLA that actually showed that 44% of our landlords actually use that rental money as a contribution to their pension. And of those, over 3/4 actually have a pension annual amount. I do want to make sure annual in case somebody says I'm doing the fat cat and this is their monthly entitlement, but 20,000 a year income. These are not fat cat landlords. So there's a lot of people out there that need this money to live on, but they don't want to be heartless. They're not in this because they want to make somebody else homeless. But we need to keep those communication channels open. One of the biggest callbacks that we've seen during this 6 months of pandemic, if I was to speak to landlords in regard to agents, is that where things are going well, we are communicated to in an efficient manner, largely. But even when we look at our people using it with PayProp, we still get landlords that say when things go wrong, those communication channels. We need to look at what's going to happen now because we did have the eviction ban extended. There are still people calling for it to be extended further. Now, you can never say never. They love hitting us with things. And I suppose we could go up until Friday and see if something comes through at 4 o'clock to change our sector. But everything that we are being told, including capacity for it to be heard during Parliament, is that the eviction ban won't be extended. So what have you done? What is with your notice periods? If there's anything pre to August the 3rd, you still need to contact the courts to let them know that this needs to still proceed. So have we looked at that as a process? Because if we don't, and it falls out, then the landlords and the tenants to some extent will hold us at fault because that uncertainty becomes in. Because a lot of people who are on that claiming and the benefit shout may be wanting to move and change their situation, but can't until the formal process. Otherwise, they find themselves in the making themselves intentionally homeless and finding that they're no longer open to assistance. So we need for both parties to make sure we follow the correct, but that is going to be an increased burden. Who handles that within? Who's your expert? Who are you bringing in? Now, we do have experts that as a PayProp customer, you can reach out to. And Agent Smart has already seen this, that people picking it up. But if during this process you have any worries as to how following that, in the same way you would tell your landlord to use an agent, I would tell our agents to use a specialist. Even what we know has changed. So let's go to somebody where it is that day in, day out, and they understand what has changed, even if that is only during the short term to help us reset what we know. Now, when it comes to our arrears management, I'm going to look at a customer, Griffin, who actually joined us during the pandemic. They actually made the decision to join and went through the boarding process and went live as a PayProp customer completely during lockdown. So what were they looking at as their reasons? Obviously, there was the technology adoption as the ability for us to enter our offices that was changed. But part of that decision timeline is they wanted to look at their ability to do more during this period of time in the pandemic, not less. And that should be part of our technology adoption and the way we look at where we've got capacity. The people who are thriving and surviving during this are being able to do more, not less. What we actually then is we talk to them about their onboarding experience, dealing with the distance and dealing with it. And as PayProp customers, you will have experienced this, but use your support. There may be functions and things that you've not used for a year. Make sure you are reaching out and finding out that all of the best functions are available. They made that decision because they were looking at their scalability.
Now, for some of you here, you may be looking at it, they've got 900 plus properties under management. So they had a bigger decision. But scale and capacity can be asked at 10 properties. It still doesn't change for those owners and for those tenants what they expect us to be able to provide. And as we saw within those regions, that consistency question and the way we're going to deal with things and that increased burden, we need to start thinking of that now, not when we're just at 900 properties. But they also did it because they want to look at how they could manage their arrears. Now, when we look at their arrears reduction, I'm actually going to talk about this as a percentage of their actual arrears, because if I talk in numbers, for some agents, it won't actually make anything. But what we're talking about is they came on board and within their first 6 weeks, they managed to reduce their arrears burden by 1/3. So we actually did a conversation with them and asked them. Now, it is using the regular reminders. Whether I've got a conversation with a tenant or not, the more I keep them informed, the better that is. And the fact of that is that my landlord then knows that every arrears is actually being chased. So ask yourself the question, are we doing that? Even if I'm entering into a payment arrangement, just like the bank say, you may still receive documentation, do we still make sure the tenant is always aware of what is happening with that situation? And then they made sure that all of that time that was previously spent on managing that arrears didn't suddenly get swamped up by other processes. What they actually did is gave some of that time that was back dedicated to arrears collection and recovery. And we need to make sure that it doesn't just go on during this good time on our new instructions and our new tenancies, because if all we're doing is replacing new, that actually will then only top up what I'm not being paid, then I'm actually getting growth neutral. And I've still got a percentage chance that those new ones I instruct now could become affected by what is going to happen over the next few months. So let's make sure we're still gaining capacity to deal with that arrears, and that we look at that almost on a weekly, a monthly basis to make sure if we need more capacity. For most agents, unless we're working on fixed fee or directly charging to landlords, our income is directly relevant on us recouping that money. We need to make sure we pay as much attention to what we count as build and in on our bottom line actually achieves it as we do increasing that bottom line. And that is one of the biggest successes that Griffin took during this. That what they actually did is they made sure that that time allocation, what we gave them as a saving, wasn't all swamped up just with front of house activities. They realized the need to remain some focused on arrears. And so that's something that as PayProp clients, especially if we've been there for a period of time, our arrears and our management and our chasing has become so smooth that do we need to perhaps revisit and make sure I'm allocating capacity for that because the impact it could have as a business. Now, I'm actually going to leave it there. I have a couple of questions that have been asked that are actually quite relevant to specific customers. So what I'm actually going to do is I will address those, but I'll bring those back. I can see who the customers are, and it's actually questions down to how to look at capacity, being able to have that consultancy approach, who can help me look at our processes. I'm happy to direct you towards people to do with that. Also, if there's any capacity down to how you're using the PayProp system and arrears management, I will definitely guide you towards that. But there seems to be a theme about also having the knowledge to be able to make those decisions. So again, I'm happy to do some signposting. And if anybody else is looking for that and you've not raised it on the Q&A questions, please feel free to either send in via your support or message me directly, and I'd be happy to also help others that want to make through how do I actually analyze this, what should I be looking for. So we're now at 3 minutes past, so I've actually ran over, so I'll let everybody get back, but thank you very much for attending. I look forward to our next update where we are in arrears, and if anybody has anything that they would like to clarify, please feel free to reach out to us. Thank you very much for your time. I look forward to continuing to work with you as PayProp customers.
Thank you.